Good afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Ken Shreve here with a breakdown of the action in today's session where we had the Fed announcement. So, as always with that, a little bit of a wild intraday action, Ken, but you're going to give us the breakdown on the market reaction to Jay Powell's commentary.
Yeah, absolutely. We'll take a look at what the market rally, strong market rally means today, and then take a look at three stocks. So we're going to take a look at Penske Automotive, which is getting support right where it should, and also a couple of energy stocks that are pulling back in orderly fashion. SM Energy and also Daco New Energy, a China-based solar company.
All right, well, let's get right to it. The NASDAQ today up 2.5% by session's close. We had the S&P 500 up 1.5%, the Dow up 1%, and the Russell 2000 up some 1.3%. So trying to make a comeback after some heavy losses. The NASDAQ getting back above the 11,000 level, closing above its May lows as well for now. But Ken, it's one positive day. That one day does not make a trend.
Yeah, I mean we have a fairly heavy cash position in the leaderboard model portfolio, and it's not like we were chomping at the bit to, increase exposure after today's gains. But clearly the market liked, what the Fed did, and I think it also liked what it heard at the press conference from Fed Chairman Jay Powell. So, right now they see the Fed funds rate. They basically raised, as expected, 75 basis points to a range of 1.5 to 1.75%. By the end of this year, they see the Fed funds rate at about 3.4%, and then 3.8% at the end of 2023. So, I mean, the market's reaction, it's kind of hard to explain, the market always does what's least expected, but, the performance today with some volume means that maybe the market is thinking that the economy can, in fact, engineer a soft landing as opposed to a hard landing where you have a long, drawn-out recession and a lot of pain in the stock market. So, the market liked the 75 basis point cut. The Fed also lowered its GDP outlook quite a bit for this year, down to 1.7% growth. So I think the market believes that the Fed is serious about fighting inflation. And the final thing I'd say is that even though the market had baked in a 75 basis point hike in July, Powell said that it'll either be 50 or 75 points. So perhaps the rate of interest rate increases may not be as aggressive as first thought by the market. So a lot of moving parts. Jed Graham did a heck of a job. That article is right on the homepage of investors.com, all the ins and outs of what happened today, but definitely a positive market reaction.
Yeah, and so thank you for all of that color, Ken. And so looking at the technicals here, heavy cash positions, that's ideal. We are on the lookout, though, if this one day of strength can turn into multiple days of strength with appropriate volume requirements, we may need to switch from that bearish stance to the bullish stance. But either which way, we don't want to get ahead of ourselves.
Yeah, exactly. And, don't forget about those three sharp drops for the NASDAQ prior to this two-session win streak. I mean, that was some violent, pretty nasty selling. Now, like I said, we did get some volume. Volume had been tracking lower for a good part of today's session, but it looks like it is going to be higher. So that's a good sign to see a little bit of volume behind the buying today. But again, only the second day of a rally attempt. The market still needs to prove itself. And again, it's not like our screens of stocks were popping with buy prospects today.
Right, because in addition to seeing the market get back on its feet in order to feel like we are, seeing a rally attempt that could have more room, we want to see those high quality setups. We want to see a lot of high quality stocks setting up. And the screens, there's a little bit of an issue, I guess, on that front. Not the screens aren't turning up a whole lot of really compelling stuff right now, but who knows? The market can change so quickly. So in a couple of days or a couple of weeks, that all could change. We don't know yet.
Yeah, you have to be nimble. You have to be open to different scenarios. But I have to tell you, I was just talking to my colleague David Chung, and saying that you look at all the big gainers in the Nasdaq 100 today, and all the best performers in the S&P 500. Just about every single one of these stocks are coming off
Mhm.
52-week lows after pretty violent bouts of institutional selling. So when you get technical damage like that done, it can take some time to
Yeah.
repair. So, happy to see the gains today. It'll be good for people's, 401ks and IRAs to see some of their mutual funds up nicely today. But in terms of individual stocks, it's still a tricky environment out there.
Exactly, because being nimble is, on the one hand, keeping an eye out for a potential follow through day in the coming days or weeks, but also being open to the possibility of a third leg down in this market that could worsen. And if that scenario plays out, that could put the NASDAQ down to the 10,000 level. Some experts are saying, and that's one scenario to keep in mind as well. You gotta watch your back in this in this market.
Yeah, I think the market was generally comforted by the way Chairman Jay Powell was talking about the economy. We do have a pretty vibrant job market. So he was talking pretty optimistic about the economy, so leading some to believe that maybe it'll be a soft landing after all, where we do see slower growth, but not enough to throw the economy into a recession
Mm-hmm.
and cause all these problems for corporate earnings. So we may come out of this okay, and I think
Mm-hmm.
judging by the market's reaction today, that could be one reason we did so well. Maybe the market's more comfortable that it could be a soft landing here.
Yeah. All right. Well, could be a step in the right direction. We're going to remain completely open-minded. Let's quickly breeze through the other major indexes here, Ken. Here's a look at the S&P 500 getting back above that 3,800 level, or closing slightly below it, but testing, getting back above that level. We also have the Dow Zero DJIA in Market Smith. Bouncing after coming down close to that 30,000 level. IWM, the Russell 2000, having a big streak of losses in recent days, now up a little bit and fighting to hold its lows from earlier in May. And of course, the 10-year Treasury yield 0T and X checking in on that, racing past that 3% mark in recent days, coming off of that level a little bit, Ken. But your assessment of what we're seeing with the 10-year yield in light of the Fed's plans here.
Well, yeah, I mean, you can see just a super powerful move for 3 days in a row for that 10-year note. So I think it had done a pretty good job of pricing in this 75 basis point hike today. So instead of selling off violently, you can see the 10-year yield here held inside of yesterday's range. So pretty orderly decline for bond yields today. So.
All right. Well, let's take a look at those stocks that we want to check in on today, starting with Penske Automotive. That is PAG, up today, but off highs, less than 1% gain here, but above average volume. And taking a look at the weekly chart, this is a stock that has had a number of tight closes and is finding support at a compelling area.
Yeah, definitely. It's you can see it's just still in the early stages of trying to come out of a pretty long consolidation here. The weakness in the broad market did not let this breakout run. That's a pretty standard story these days. But it has come down right to the 10-week moving average. And for those that are itching to buy a stock or add a new one, I think this one is actionable. Right here. But just remember, we're still in the very early stages of a rally attempt, and any new stocks that you buy should be very small positions to start, and then you can make incremental buys if the market tells you that your timing was right. So if you buy a stock and it starts rising in price and you're profitable very quickly, that's positive feedback, and you can increase the position a little bit. So start small with new purchases, and if you like Penske Automotive, nibble and see how it works.
All right. Yeah. Size that position down and make sure you are managing that risk appropriately. All right, let's also take a look at SM Energy. U.S. explorer and producer group name, down for the week by a little over 5%, but holding up relatively well because a couple of weeks ago, a huge move out of a base, up over 32% for the week. So looking on over at the daily chart, seeing some support at the 21-day.
Yeah. So this one might be slightly extended, but I just like the way this one pulled back. We've seen some pretty orderly pullbacks in the oil and gas patch. This was a pretty solid breakout, and again, just a nice low volume pullback to the 21-day moving average. Again, if you wanted to nibble here at support at the 21-day line, you have a pretty clear exit point. You could set your stop below the low from a couple days ago. If the trade doesn't work out, you just keep a tight stop, just like how it's finding support here, and pretty orderly pullback. You never want to see a violent pullback after a breakout. You like to see it orderly, and I think SM Energy fits the bill here.
Okay, we'll keep it on our watch list. And also a solar name worth checking in on is Daqo New Energy DQ, pulling back after a strong breakout of its own. But hopefully it can find support here. A turning tail a little bit more would result technically in a round trip for this stock, but for those who maybe had an early entry here within the base, maybe over the 47, 48 level, take some profits into strength. But ideally, Ken, maybe a new base forms from here. What are you seeing in this chart?
Yeah, I mean, I listen. Sometimes a stock will erase a pretty big gain from a buy point. Typically, we don't look at that as a good sign. But overall, again, just like SM Energy, this pullback looks pretty constructive to me. You can see a couple days ago it fell sharply, closed up near its high. That was in heavy volume. It declined yesterday in light volume, and it's rallying today. So the solar stocks continue to act pretty well. Daqo is a Chinese company, but it's been mostly out of the crosshairs of all this regulatory crackdown going down in China. So Daqo has got outstanding fundamentals. You can see a really solid breakout from what we would call a bottoming base here. Pretty orderly pullback. So this is one to watch as well. But again, it is China, so there's a little bit of risk there. But this one is acting very well in my view.
All right, Ken, thank you so much for that assessment. That's it for today, everyone. Thank you for tuning in. We'll be back with more tomorrow morning on IABD Live, and we hope you join us, investors.com/IABD Live, for all the details on that. And we'll also see you right back here tomorrow after the close. Thanks for watching.